Okay, now we're going to do a continuation of that last video. As you can see, the last video we went over Bollinger Bands, and now you pretty much should have Bollinger Bands on your chart right now. We're now going to continue. As you can see, last thing also we talked about was alerts. So that's the whole purpose of alerts. These will become your best friends one day, but for right now in the beginning, the main thing we all need to be focused on are the Bollinger Bands. The next thing we're going to do to add to the Bollinger Bands, we need to find the major supports and major resistance lines. And we're going to go over that now. Let's get rid of this alert that I originally have on here. We're going to click on remove. And it's going to say, do you really want to delete that alert? Yeah, let's get rid of it. Let's keep everything simple. Also right now, since we're already on one chart and we just really need to stick to one chart, you're going to put your indicators on this particular chart. You're going to go to the one that say M6A1. 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 This is where all your indicators need to be put on. Bollinger Bands is going to follow all charts. No matter what you click on, you're always going to see your Bollinger Bands regardless. But for this chart, this is the chart where you can see your data. If you go to the left, you see everything. Because remember, this is the continuation chart. This is the chart where you see everything going to the left. You see everything that took place in the last few years, and you know, the last 4 or 5 years. That's how much data you get to see. So that's the reason why we're on this chart, because we need that data. We need to see what the market is doing, and if it's fallen 2 years, it's back down to an area where it was 2 years ago, you need to know that it's at that area. You know, so that's the reason for this particular chart. This is the first chart, is the one, the M6, this one that's at the top here. If you go to the upper left corner, it's a M6AU. This is the one you will make your trades on, and then this one is the same exact thing. This is the one where you will know, should you enter the market here on the bottom, or should you sell at the top, should you buy on the bottom. That's the purpose of this chart. And then also to put the rest of your indicators on. We're on the daily chart. I like to explain to everybody and let everybody know that if you can't find support levels and resistance levels on a longer time frame chart, then it's going to be hard for you to really trade, because you need to know exactly where the market has been before and where it's going. These are things you have to know in advance. You can't sit here and let the market surprise you by getting to those areas, and then it does something where you wasn't aware of, or you didn't know it could happen. That's the whole purpose of trading and learning how to trade. Your job is to know what you're doing eventually. You know, in the beginning you don't know anything, but your job is to study, like the Bible tells us, to study to show ourselves approved. That's your job. Your job is to study what this market is doing and getting to know the actual countries of the asset that you're trading. So we're trading Australia and the USD. Lots of us already know about the US markets. Then also, like I said, start just learning a little bit about Australia. See what goes on over there in Australia. That's, like I said, it just help you out the more when it comes to actually understanding those pretty much economic, things that takes place in those particular countries. So that's the going to the next level in trading. But without, the more you learn, the more you study, this becomes second nature. And next thing you know, you're doing this in your sleep. You're doing this with your eyes closed. You're like, it doesn't matter anymore. But that's the purpose of this video, is just to get you familiar with this TradingView platform. Because there's not many videos on it. So I'll do the best I can to try to explain everything that I could. Everything right here, we're going to go over to the right with these numbers. These numbers are pretty much the price. That's all these numbers are, prices. Any indicators you put on there, those indicators will, whatever number you had to indicate that, it will also be over here on this side, to let you know, hey, this is the indicator for this particular area, whether it's a line that's on the top or a line that's on the bottom. So let's find these lines now. Right now, we need to focus on the most current part of the chart for right now. The part where the chart actually been trading within, and it's been going up, it's been falling, and it's going back up. That's the part we need to find first. So with that being said, all I'm doing is going to a daily chart. You can do a daily chart, a weekly chart. You can do whatever you want. If I go to a weekly chart, we just need to see tops. We need to see where the market came and made two candles right here. This is how we find tops. We looking for areas where the market came and created tops where more than like 2 or 3 candles, more than one candle came and did the same exact thing. That's all we're doing. We're looking for that. So let's just keep looking. Let's scroll over to the left. Scroll over to the left. I don't see any more candles. I see wicks in the same vicinity of these two candles. I see this wick actually in the same vicinity of these two candles. So we're just gonna keep scrolling to the left because we just need to see top. We need to see like bottoms. Tops. The market's making tops. Here's the one here. You got these two. You got this one here created a body, and this one created a body. Then I see these wicks. So this already showing me something. So I'm gonna just keep going over. Okay. Don't have to go over too far. All right, that's good enough. This is perfect. So here, let's see. Yeah, 72.16 is really good. 72.16. I'm gonna go over here. Let's go over here to the left hand side of the screen. These are all the other these are the indicators you could place on charts and do all little creative tools you can use on your chart. Right now we're just gonna click on the one that's the second one from where it's a cross. We're gonna click on this one here. When you click on it, we're gonna then this tab is gonna pop up. We're gonna look for horizontal line. So we're gonna scroll down to find horizontal line. And now we're gonna take this horizontal line. You can actually try to find the area that you wanted to be. If you can't, then you can just put it on the chart anywhere. Like right now I want it to be at 72. 72, we can say 72. Let's go up right here. 72.16. This is where I want my line at. But sometimes, like I said, sometimes it's hard to get the line there. So all you have to do is click on that line. So say if I have the line here, all I got to do now when the line is there, this tab is going to come up automatically because it's highlighted. And this is the little drag up and drag down icon. When you see this tab, you can then click on settings, which will be this gear icon. You can click on that and just change the settings to where you want it to be, where it's a coordinates. That's all you have to do in anything on your horizontal line. You just got to go to where it's a coordinates. You just got to click on 72.16, and then it's automatically going to just take it there on your chart. All right, so far, and then we can change the color. You can then click back on that line, and then you have to see this come up again. You're going to see the little color here, like a color pencil. You're going to click on that, and you can change the color to red because this is the top. I want you to always be mindful whenever the market gets to a top, you need to start preparing yourself to sell, and red is a good color for selling. So you can change this over time or change it to whatever color you want, but for just like educational purposes, this line need to be red because when the market get back up here to this line, you need to be selling and you need to be preparing yourself to sell. All right, with that being said, I call that easy money. So now we're going to now do the same thing. We're going to now find a bottom. Now we need to see, okay, within this range, the market is went all the way up here, but for right now, this is a good area of resistance for right now because the market has to blow past this area before we even get up here. So for right now, we need to focus on this area of resistance. This is a nice area of resistance until the market go up past this line and then create this resistance will now become a new support. Right now, we need to focus on this now being the top first. And now we need to go to the bottom and look for some bottoms to see where the market came and created bottoms. All right. So what I'm going to do now is fix this chart. I got to fix it. Sometimes it'll be looking crazy. All right. Let's look for some bottoms. And all we doing is going to the left and see if it lines up with what you currently have right now, like right here. Looking at these, this looks good. So I'm gonna zoom in. We need to focus on what's current right now. We see that the market came up, went up, fell down, created these two candles, which they look the same. Then it came down some more, created these two candles, which just a little bit past here. So that's then it went up. It's creating, it's getting lower and lower, as you can see. You know, this is higher than this area, so this area is getting lower. This area is getting a little bit lower. It's going up more. It's going up stronger, but it's creating lower and lower areas. So now we're currently here. These are the current candles. This on the weekly. So let's go to a daily. Go to a daily chart and let's look for it on the daily. So let's do this. All right, there we go. Look like I found something right there. We can do 6882. All right, and the reason why I got 6882, let's go back over here to put a new horizontal line on it. Just double click, then go find horizontal line, and let's just put it at 6882. Let's do 6882. Yes.
Could I wear my tie-dye shirt on Tuesday?
Yeah. Ask mommy, okay?
Okay, but she's sleeping.
When she wake up. All right, sorry about that. That was my daughter. So now we found it. I'm sorry, I went to the area of the settings and I had just pretty much changed the coordinates. I changed the 6882, and then everything else, I pretty much, the color I can change it. I can go to style and change the color. This way, the green. This is what we need to buy. All right, and the reason for me finding this line is that I found these candlesticks. They were still close. I couldn't get a perfect body, like a perfect, both of them lining up. The bodies are both match. I couldn't find it, but I did find these two bodies, which they both pretty much currently still not far from each other. It don't have to be perfect, but what I did was I based this support line based off of the bottom of this candle that was on the 15th, and then this candle that was on the 16th of May. So pretty much a good whole month of the market moving. The market actually came down within the next month to come back down and retest this particular area. So now this area is a nice strong support area. As you can see, the market actually came down here before in May. We're now in June. So this is now June's movement based on May's movement. This all took place in May. The market actually, like within May, actually came up here. In May, it came up here to this area to get closer to this line. And then what day did it actually start falling? On the 3rd of June. On the 3rd of June, it started to create that downward spiral. You know, on the 3rd of June, it created the first red candlestick on the 3rd. But from here on in, it was creating red candlesticks, but it was still showing a nice uptrend. And that's another thing we're going to learn. Uptrends and downtrends is pretty much self-explanatory. You're going up when it's up, and then you're going down when it's down. These are called uptrends. These are the trends that the market is moving in. So with that being said, these are the main areas you need to know when it comes to trading as a beginner. You need to know the highs. You need to know like what's the most common place that the market goes to and it normally falls. And you need to know the lows. What's the most common place that the market fall to? I mean, when it rises to, and then where it falls to. You need to know these areas. Once you know these areas, you have it down pat. This is the best way of trading. This is where I make all my successful trades from. Pretty much the sky's the limit. You can put as much money on a trade as you want. If you know it's at a strong bottom, you just gotta buy it back up. That's all you're doing. So that's the purpose of the Bollinger Bands. So these literally the only indicators you need on your chart for right now, starting out as a beginner. You just need your Bollinger Bands. You need 2 of them, and then you need just the horizontal lines to know to identify the resistant areas and the support areas. Resistance is another word for ceiling. If the market hits the ceiling, it has to fall back down. What goes up must fall back down, and what falls down eventually has to go up. So that's the terminology that you're going to always hear when it comes to trading. This video is just really to help you out when it comes to hurry up and finding these locations on your chart, and when it comes to using TradingView, where to go and where to know where to go when you do all of this, you know, all this movement on the chart and how to identify everything and what means what. You know, that's the whole purpose of this. You see this red line here? This red line are the two blue lines also. The red line is a major and your blue line are acting just like your red line, but they're the minors. As you can see, every time the market comes to your blue line, the market actually sometimes reject it and fall down. And as you can see, the upper blue line, this is the second phase. This is the where, if it can't fall down at the first blue line, this is the phase right here where it has to, this is where it will exhaust itself completely out and then fall back down. So that's the purpose of these two blue lines. The red line is the major. This is normally the area, the whole entire area where the market normally comes and falls. But the blue line will be a little bit above the red line to show exactly where the highest points of that time frame. So the highest points of the day. That's all the blue line is for. So if you can get all the way to the highest, so if the market is coming up and it gets to the highest point and it actually get to the blue line at the top, that means you need to start selling it back down, because remember, the market was coming up to the blue line, not down to it. So that means if the market was going up this way and it hit this blue line and you started to see candlesticks, you started to see other candlesticks opening and they wasn't passing that blue line, that means you sell. But if you continue to saw the market going up, that means now since it's up, you can't really make no trade yet until it get up to this blue line and reject that blue line and then start falling down, just like what it did here at this red line. That's all you have to do. In order, whenever the market passes an area and it's not creating any candlesticks underneath the area that you needed to pass, it's going to continue to go up. If it goes up and past that line, then you need to now wait till the market comes down and retest that line that it originally passed. Every time the market come down and retest that line, that would then be your new buy line. You have to buy it here and then you have to exit here at that blue line at the top. This is how the market works. So with that being said, you enter here on the bottom. You entering, and this is a good, nice little long position where you know that majority of the time on the longer time frame, it comes here and goes back up anyway. So what you want to do for a person that want to go long on the trade, meaning hold the trade for quite some time, about a day or a few hours, if you're going long on the trade, then you have to enter here and go long and let the market just move in that one direction. For a short-term trader, a person that just want to make a few pips, you would enter at this line, but then you would exit at the blue line here. This will be your exit area, because you're a short-term trader. You're a person that's just trying to collect, you're just trying to collect a few pips or ticks, or the other word for the movement itself. You're just trying to collect a few pips, ticks. That's all you want. So you only want a few of that. So that's the purpose of this. You'll buy here and you'll sell immediately at that blue line. So the distance between this area, I'm gonna go over here to the left and get a measuring stick. Right here on the left hand side, say measure. All I have to do is click on the green line and then go up to the blue line. That'll let me know how much pips I need to collect. And as you can see here, 70 pips. That means from this line to this line is 70 pips. That means you'll make, depending on how many contracts you bought, you'll make 70. It'll be 70 pips worth. So if you buy 10 contracts, the market move in your favor 70 pips. We take a calculator out and we do 10 times 70, which everybody really should know that by heart. That'd be $70 for you, for those that's doing this. So I'm sorry, that would be $700. So for those that bought 10 contracts and you only wanted the market to move just 70 pips, you'll make $700. Vice versa, if you wanted the market to move just 20 pips, you will make $1,400. You bought 20 contracts and the market moved 70 pips, you will make $1,400. Same thing if you bought 30 contracts. All you're doing is taking how many contracts you want to buy, or how much money you have in your account. You're basing that. You'll make that amount of money based on how many contracts you bought. So if you buy 30 contracts, you get paid $30 every time the market moves 1 point. So with $30 and you times that by 70, that is $2,100 you would have made just within this square that you see on the chart. That blue square But guess what? The market is going to continue to go up, guys. The market is going to continue to go up. Look how long this market is going to go up. So you can sit here and be like, you know what? Nah, I don't want just $2,100. I want more than $2,100. All you got to do is continue to stay in the trade. That's all you have to do. But the best way of trading is trade at the stronger support lines and trade at the stronger resistance lines at the top, and then the ones on the bottom, and then use these blue lines. If the market passed these areas and you wasn't able to make a trade, wait till the market come back down and retest that area and then buy it back up, so you could then continue the uptrend that is already in already. That's the purpose of trading. That's the purpose also of identifying where you need to enter and where you need to exit. You have to have these indicators on your chart so they can help you to identify where's the strong areas of support and where's the strong area of resistance. If the market is now moving in a downward trend, when will it eventually become an uptrend? You know, it's all based on your eyes. Your eyes is the best indicators you have. Without them, you cannot trade. You have to focus and continue to look at your chart and continue to stay focused and continue to adjust to what the market is doing. And the only way to do that, you have to get on here and physically look at a chart so you can become familiar with the chart. That's the whole purpose of this. As you can see, that pop-up just popped up right there on the left corner because I'm on a free subscription and I had to remove that pop-up. The reason for the free subscription is for us that's like newbies, you know, learning how to trade for the first time. It's okay. The free subscription is perfect. That's all you need. But as you become more advanced, you're going to realize that, yeah, I don't want to keep seeing pop-ups no more. You know, and it's just like the weirdest thing, you know, it doesn't matter how much money you're making, you just don't like pop-ups. You could then pay for the monthly subscription just to not see pop-ups. But then also you could pay for special tools that no one else can get their hands on. Like say if you want to look at this chart and you want to look at two charts, right? You want to look at a daily chart and then a weekly chart at the same time. You can go up here to this icon where it says select layout. At the upper right corner above these numbers, it says select layout. If I want to get real, you know, in tune with the market, I can then change the actual chart to different time frames and different. I can see as many chart layouts as possible. Like right here, I can see two charts. I can see two screens, which one will be horizontal and one will be vertical. I could click on it, but because I'm not paying for the paid subscription, it's going to say you're going to need a bigger monitor. Your plan has one chart per tab limit. That means for the free subscription, guys, I can only see one chart at a time. But our upgraded plans let you see up to 8 linked charts perfectly synced, all in the same screen. So with that being said, once you become advanced, this will make more sense. But for right now, it's not going to help you become a successful trader. These indicators will. So you don't really need that for right now. But the more money you make, trust me, you're going to realize that, yeah, I want to see more screens. I want to see a 1 hour screen and a daily screen. Like, you're going to become that advanced. Also, we need to understand that there's two ways of trading, guys. There's fundamentals. Fundamentals is news trading. You're a trader where you wait on the news to come out. There's certain news that come out, and we're going to go over that also. We're going to go to a website called investing.com so you can see that particular news. And then the second trader is a technical trader. What you see on the chart right now, these are technical trades, meaning that I am technically trading. I'm putting lines on the chart to find areas of resistance and support areas, and this is how I'm trading. And then you have those that don't care 2 cents about this. They only care about news events that's coming out. So what I'm going to do is go up here and create a new tab and just type in investing.com. Please write this down, take notes, because it's very important. This is where all your news come out. As you can see here, when you log on, say top 5 things to watch in the market in the week ahead. So in the week ahead, it's right here. This is the best location to go to find all news that's going on throughout the whole entire world. Everything's right here at investing.com. So with that being said, we need to go to where actual economic calendar is. So we're going to go up here at the top where it says tools. You're going to highlight it. You're not going to click on it. Just going to highlight it, and then this is going to pop up. All these things are going to pop up. The only thing we need to focus on is economic calendar. Click on the economic calendar. and this is the calendar. You can look at the news from yesterday, today, tomorrow, this week, which is the whole week, or next week. For right now, we're going to focus on today, since today's the day. So what you see here is what you can actually customize on your chart. Since we're only going to be focused on Australia, and we're only going to be focused on the US, all we could do right here, let's go to our filters. Go to your filters, click on filters. We're going to get rid of all the other traffic and noise, okay? We're going to get rid of everything else. Canada, get rid of that. I'm going to keep mine checked, but I want you, since you're starting out, I want you to get rid of everything checked. Get anything that's checked outside of Australia and the US. The US should be on the bottom. So right there, United States. I want you to leave United States checked, and I want you to leave Australia checked. Everything else is pointless, don't mean absolutely nothing to you. Once you're done with that, we're going to scroll down to time. It's going to say display time remaining until announced, or display time only. We're going to keep this check, and I'll show you why. Keep display time remaining check. That's already defaulted for you. Now we're going to scroll down where it say category. Check all. Select all clear. So we're not going to select all clear. We're going to keep everything up, because this is all the big news we need to know for each economy that we're trading. Employment, credit, balance, economic activity, central banks news, bond news, inflation, which is very important for all of us, guys. Inflation is what boosts up your interest rate and causes the prices of gas to go up, and also the prices of, you know, food that we buy or cars that we buy, and all these, you know, these materialistic things. You know, this is what inflation does. This is, you need to know this news events. You also right here where it say importance. Every news is important, but I'm gonna be honest and truthful with you. You really need to be focused on anything with the icon where it got 2 stars on by it or 3 stars by it. This is the news you only care about. So make sure these 2 is checked, and then uncheck the one that say 1. These 2 being checked, you will know exactly what's going to come out before it comes out. You're then going to click on apply. Once you're done, you're going to click apply. And also, I'm sorry, go on to investing.com and create a profile. You need to go in here and sign in as an account. As you can see, I'm already signed in. So create a profile so this can stay safe. If you don't create a profile, you'll always have to come back in here and always change your filters. So let's click on this week. Let's focus on what's coming out this week that we all need to be focused on from the US and the Australia markets, all right? We're going to scroll down. It's Sunday, June 19th. It's already Sunday, June 19th. So far, I don't have nothing like extremely high-powered type news that's going to come out today. So that's okay. We're going to go down to Monday. Monday is a holiday for the United States. They call it Juneteenth. So, which we all should pretty much know. If we don't know, just look it up. We're going to scroll down and look at all the other news that's coming out. All this news is good news. It's important for we only focus on the US and the Aussie markets. You're going to see AUD for the Australia market, and then you're going to see USD for the US market. It's good news, but these are more like index news, like news where we're trying to say this week we think that the market is going to do this. That's all that is. So that's not really important. What is important is the news on Monday night at 2130. This is actually military time, guys. So 2130 will be 9:30 at night. They're going to do this. This is called the Reserve Bank of Australia meeting minutes. If I click on that, let's see why this news is important. If I click on it, this is going to come up. It say the Reserve Bank of Australia, RBA. You're going to always see that word RBA. It means pretty much Reserve Bank of Australia. It say monetary policy meeting minutes are a detailed record of the bank's most recent policy setting meeting containing in-depth insight into the economic conditions that influence the rate decision. If I scroll down, hear what it says here. More dovish than expected minutes could be taken as negative slash bearish, meaning that the market, if this is not good news, the market is going to fall. It said for the odd, it say which is the Australia dollar. It say then the second is while more hawkish than expected minutes could be taken as a positive bullish for the Australian dollar. That means, guys, if the news is good and the numbers are good, where the economy is steady, is looking good for the economy. The numbers are looking good. Everything as far as their trajectory, how the way they have pretty much as far as their numbers, economic growth is happening. Jobs are people not walking away from their job as much. Like that number will always be good. That means this market will most likely on Monday, Eastern time, 9:30, the market might shoot up. All right, so this is what I'm saying. Where there's people out here that only focus on news events, this will be a fundamental trader. You need to learn both. Never just do one. Be more knowledgeable in both. You can still trade technical, which is my strongest area of trading is both, but still learn the fundamentals, but learn the technicals and also learn fundamentals. Get on here and learn these news events. These news events are very powerful because, once again, I already know the news events sometimes before they come out because I've been doing this over a decade. So I'm used to seeing these news events now, and I'm now actually used to the time frames that these news events come out. I already know that during that time, I have to make time to be there and be ready and prepared because then that'd be free. That'd be free money that I left if I'm not there to catch that news event. So that's another thing. If you don't want to trade technical, say if you can't trade technical that day, something happened, life happens. Then go and find out what news event's still coming out for the remainder of the day. Something might come out at night. You're going to be home at night, so trade that news event. Once again, if the numbers are right, then you will trade in the direction that the market is moving in based off that news event. Okay, so now we're going to get rid of this. We're now going to scroll down and see what other important news events going to come out this week for the Aussie. We're going to go into the Tuesday. Let's see what's going on with Aussie in the U.S. Existing home sales. I'm going to let everyone click on these. I'm not going to click on all of them because this is just an educational video to show everybody where to go. Everything else will then be on you. So at 10 o'clock Eastern time, so whatever time frame or time zone you're living in, all you have to do is take that time, Eastern time, and you'll know the difference. But on Monday, 10 o'clock in the morning, there will be an existing home sales. This might make the U.S. markets go up. So you already know on Tuesday, hey, Tuesday at 10 o'clock, I need to be there to watch and see what happens at 10 o'clock. You can actually look at an hourly chart for these news events. So instead of looking at the daily chart, whenever news events come out, look at the time frame of the hour that market is coming out. So if it's an hour, if news coming out at a particular hour, like at 4 o'clock, 3 o'clock, 10 o'clock, then just go to an hourly chart. That's all you have to do. So this is now an hourly chart on the same exact thing we've been looking at, Australia versus the U.S. As you can see on the hourly chart, if I'm not going to trade the news event, look how I can be trading just technical by itself. Look at this right here. Look at how the market came and made this wick, starting to reject that blue line on the bottom, guys, and went completely up. Blew past this second blue line, and then it just kept going up. You see what I'm saying? I could have easily traded at this blue line and then exit at this blue line right here, or even if I felt that it was going to continue to go up, I could have exited at the second blue line. But once again, as it got as high as that second blue line, guess what it did, guys? It just fell back down. And guess what you think it's going to do now, guys? It's here now. This is current. Guess what's going to happen now? It's going to go back up. It's that simple. This is how you trade. So we're going to keep it at that for right now. Everyone's chart, after looking at these videos, we all should have our charts looking the same, and everybody should be good to go on these charts. Continue to look at the news events. You see Tuesday, we only have one powerful news event for the U.S. markets. Let's just keep scrolling down, see if anything else is going to come out. Wednesday, guys, is some very important news, guys. The Federal Reserve Chairman will speak at 9:30 in the morning. Guys, please, if you can, be there and watch what this man say for the U.S. markets. They've been talking for years and decades. For us that don't know nothing about trading, guys, whenever that they talk and speak, guys, the market goes bananas. It goes bananas, guys. It's the most beautifulest thing you can ever see when you're a trader. You're really waiting for this person to talk. He's going to testify about our country, and he's going to tell Congress. He's going to stand before Congress and explain to Congress where he see our economy in the next few years or the next few months, and what can we do to stop a recession from taking place. Like, all of this is going to happen at 9:30, and he's going to have a good little talk. That meeting could take place. It could be like about an hour long or 30 minutes long. It depends on how many subjects they have to talk about. So please, if you can, be there to watch this type of news and start getting familiar with this news, because this news come out, guys, literally on a monthly basis. Literally. So be there to watch that. He's going to explain what's going on in the U.S., guys. So we're going to continue to just keep scrolling down on this chart. Scroll down, look for other news. API weekly crude oil stock. I'm going to let you guys get into that. Just continue to go in here and look at it and type these things up and look it up on your own. And everything else is self-explanatory. I'm going to let you continue to go in here and start familiarizing yourself with everything that has 2 or 3 stars next to it. It's important news. We need to know these things. We have to know. So just keep scrolling down. As you can see on Thursday, guys, he's going to testify again. The Federal Reserve, he's testifying again at 10 o'clock, guys. You can actually type in Google, say, Fed Chair Powell testifies, and the actual, even on YouTube, a video will come up where you can actually sit there and watch this live. So that's what I'm trying to get everybody into the habit of. This is what makes me a stronger trader, by knowing these news events. Now we're going to scroll down to Friday. Friday, we have a holiday for the New Zealand, so that's not on you guys' chart, so don't worry about that. And that's pretty much it. Australia, we're going to have the, Reserve Bank, Australia Governor Lowe speaks. So once again, you don't have to watch the video on this one, but once again, it's still important to know that they might say something that might impact the Australian market during that time at 7:30 in the morning Eastern time. So on your time frame, just figure out those times, and compare it to the time to your chart. Or also, just on here, let me see if it'll allow me to do it. I can change the time frame right here. So right here at the top, the current time, I can actually change the time zones here. All right, so that way we can change time zones. Since I stay Eastern time, U.S. Canada, I got to keep it the same. But for those that stay in Nicaragua, Central America, stuff like that, you would then change your time zone. So let me see if I go to Central America, see if it change it to a time frame for you. All right, you guys 2 hours behind, so it won't be Central America. Let's see, Hawaii, Island. Oh, Mountain. I think you guys are Mountain time. Let me just double check. Yeah, so it will be Mountain time for those that's in Nicaragua. So if you're in Nicaragua, just go up here where it say current time and just change it to Mountain time USD. So Mountain time USD. Canada, yeah, that would be your time frame, since you're 2 hours behind us. So yeah, make sure yours say Mountain time. Now when it's on Mountain time, you will actually see the time frame that you need to focus on whenever the market take place, for the Aussie and then for everything else. So now you'll see it. Remember, it's military time, guys, on the chart. So if you don't know anything about military time, just Google military time so you can familiarize yourself. So when something say 14:30, if that say 14:30, that's letting you know that that's 2 o'clock. So 2:30 actually during your time. So that's all it is. 2:30 your time. Anything that say like 16:45, 1600, that will be 4 o'clock your time. So it's military time. So 24-hour time pretty much. I know we keep saying military, but it's the 24-hour. We all used to the 12-hour time frames, but this is actually 24-hour time frames on the charts. Anything that say 1930, guys, is pretty much saying 7:30. 1930 is 7:30. 1800 is 6 o'clock. 1800 is 6 o'clock. 1500 is 3 o'clock. So just get on Google and just type that in so you can see those different time frames. For right now, this will be it. To me, I feel like these 2 videos have explained enough for anybody right now to really start trading. So I'm gonna do a 3rd video. The 3rd video will be based on how to trade using the buttons that you see here: sell and buy. That's what you need to know. And then you know where to place, you know, your stop losses and your take profits at. And the stop loss meaning pretty much how much money you're willing to lose, and the take profit is how much money you're willing to win and to make on that trade. So that will be the next videos. I appreciate everyone as always. God bless, and may everybody stay safe throughout the day. And thank you for your time.